At Context Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how startups and venture capital are changing. We chat with venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, I'm delighted to have Milana Kusmanovich of World Innovation Lab, or WIL, with us. Milana, thank you so very much.
Thank you so much for having me.
Milana, can you please tell us how you got to WIL?
Wow, that's a long story, but I started my career at Citigroup in Tokyo. After that, I spent some time at IMF doing economic capacity building, got my MBA, did some consulting, not that known firm, and now I've been in venture for 4 years.
And before you went to World Innovation Lab, which is a Japanese fund, you spent some time in Japan.
Correct.
And which firm was that with?
A Citigroup.
Got it. And then at World Innovation Lab, my understanding is that there's roughly two groups within it. One is direct investments into startups, and then one is fund of funds.
Correct.
Can you talk more about WIL's program overall?
Yes, so we got started in 2013, and our mission is, simply put, to use VC as growth for innovation. So what does that mean? It means all our capital predominantly comes from Japan, large Japanese corporations and government. On the direct side, we invest in B2B SaaS, and of course that includes AI. I cannot fail to mention AI. And so usually stage B and plus is the sweet spot, also because given our LPs, we're able to sort of help our portfolio companies expand to Japan, and that usually starts at around that age. And then fund of funds strategy started roughly 5 or so years ago, and on that is where I sit, and that is where my role is. And there we invest in emerging managers, established managers, and we also do co-investments.
Understood. Within WIL, I believe you've worn different hats.
Correct.
Can you talk about the different hats you've worn and how it's helped you better understand, if we were to describe it as an animal, the different parts of the animal?
Yes. So I started working with our founders as a director of platform and helping them expand to Japan. So that meant really thinking about messaging, helping connect them with right resources, helping tell their story for Japan market. Then I transitioned into being a chief of staff to our co-founder and GP, Gen Isayama, and that really broadened the set of my responsibilities, doing anything from working with our LPs, helping share insights from Silicon Valley, and being in charge of some strategic projects. And now I sit at the fund of funds side, where I do end-to-end due diligence process, from sourcing to engaging with GPs to helping them pass our investment committee.
How has your role has changed while you've been at WIL? How has WIL changed while you've been there? Like larger funds, more Japanese LPs, more US investing, maybe more international investing, maybe, what are the different changes?
So definitely we have grown in terms of the size. We've also brought on new strategies. So we have also a couple of single LP CVCs that we run on behalf of select partners. So I think if we're thinking about how WIL has changed, it's that we have deepened and strengthened our relationship with our LPs, and also always constantly trying to find new ways to drive innovation within large corporations.
One thing that I've noticed since being in the Bay Area roughly 2010 to 2014 for grad school was that there's so much innovation that is being created by not just US companies, but foreign countries investing, Japan, South Korea, Taiwan, so on and so forth. How has Japan's view, and I know this is a very broad open question, but Japan view innovation in US? In terms of are they more interested now? Are they less? Does it ebb and flow?
I mean, it's, like you said, a very broad question, but if you were to look at the number of companies that have been opening a Silicon Valley office, Japanese companies, that has been increasing. I think also the Japanese government is doing an amazing job in trying to spur innovation and putting a lot of capital and support into strengthening Japanese ecosystem. But that does also mean that they want, the amazing founders and the capitalists, venture capitalists there to learn about, Silicon Valley model of innovation. So I would say that overall, Japan has been strengthening its understanding of innovation, of its own ecosystem, and thus just the level of activity that we're also seeing by Japanese companies in the Bay has been increasing.
When Americans, especially those in the Bay Area, Silicon Valley, think about Japan, they think of SoftBank, they think of Rakuten, and they think of a lot of oftentimes going to Japan. So you at Will help Japanese investors get investments into startups in Silicon Valley. How much do you help with helping American companies go to Japan?
So that is one of our differentiators, and I would say that really just over a couple of last months, so let's just say June and July, we have worked with 11 Labs, DeepL, Candex, Canva, and really what we help with is, I would simply put it as trust. Because in Japan, knowing that this startup is viable, knowing that this startup has a high potential, and having that not necessarily sign of approval, but sign that someone who you can communicate in your own native language, someone who understands your company, what you're trying to achieve, is very bullish on these companies, is very helpful. One thing that I would point out is that when funds talk about the value add that they provide to founders, I think sometimes as an industry we tend to maybe oversell or overemphasize the role that we play. And I just want to say that even for those companies that I just mentioned, they have very incredibly visionary founders, incredibly good teams, incredible dedication to execution. So I never want it to come across like, oh, we are the ones who make stuff possible. No, we are like a catalyst. Great founder will always find a way. It's just a matter of, do you want to be climbing 25 floors or do you want to take an elevator? And so I think that is the role that we play. We make it easier, faster, and just we are a catalyst, but we invest in companies that we have full belief in. And at the end of the day, it's not because we exist that these companies are successful, it's because of their DNA. And I think as an industry, we need to bring that spotlight back on founders when we're talking about their successes in business development.
One thing, as I've gotten to better understand the Japan-US dynamic, is that US entrepreneurs don't always fully appreciate how big of a market Japan is.
Correct.
And we're in the Digital Garage office, and I was an employee in 2019, and oftentimes they talk about how they helped Twitter go to Japan. But the whole, I think what started is maybe Yahoo Japan. And so can you talk about just how big Japan is as a market?
I think it's one of the still top 3 markets for the software spend. It's one of the largest economies in the world. It's also a country that people perceive to be very hard to penetrate. But once you do penetrate it, you have certain longevity. And so I think for that, some of the companies that I mentioned, some of their largest markets are in Japan, top, let's say 5 or so. So I would say an amazing opportunity, especially also for companies that potentially have a way to address some of the issues that Japan as a country is facing. So demographic changes, provision of care. I think there's a lot of potential for companies like that, in particular, to be expanding to Japan.
You had mentioned a few minutes ago about Japanese government pushing into venture. When I visited Japan in April last year, I was reading about how the government was like, we have a fund that's going to invest into venture funds. Have you seen that carry over into what you all are doing with your corporate partners, that there's more interest even more into investing into venture funds and startups?
Yeah, so it's actually very interesting you're asking that. We are seeing increased interest not just in setting up CVCs, but we are seeing more corporates thinking about investing in funds. So not direct, but fund investments. And I think it's just this general sentiment that the world is changing so fast, especially with the advent of AI. And so how can you understand what's going on in the industry? How can you have good, even like risk-adjusted returns? How can you have the broadest access to information that's relevant for you as a corporation? So we've definitely seen an increase, and to the point that sometimes we have to say like, sorry, we cannot help you or support you on this, because it is a lot of time and effort and resources to execute on this properly.
So often GPs like myself forget that certain LPs need to go raise capital. And it's good to hear that you're oversubscribed at points in time. But,
I didn't say that, you said that.
So Akar Vashani of Fairview, Jamie of Screen Door, they're always like, hey, GPs sometimes forget we need to go fundraise. What is that fundraising dynamic for you all? It's very different just given it's Japanese investors. I assume longer sales cycle, I assume a certain type of investor. And within Japan, as I've gone to better appreciate the country, there's like big banks like Resona, there's export-import. Can you talk more about that, your capital base?
Yes, so as I mentioned, most of our capital comes from large Japanese corporations, also to an extent from Japanese government. And so for us, what we really look for when we are thinking about our LPs, and this is more on the direct side, I can talk about fund-to-fund side as well, is really someone who truly wants to leverage technology to change how they're doing their day-to-day business. Someone who's truly open-minded when it comes to adopting new solution, creating that innovation mindset within the companies. And so it ends up being not just about sourcing capital, it's about, can we work together? Can what we provide truly be of benefit to you as a corporation? And so that is something that we look for in our LPs on the direct side. And then on the fund-of-fund side, we are more of a financial product. So we're looking for more financial institutions who are interested in diversifying their portfolio, having exposure to venture, and just having good risk-adjusted returns.
On the direct side, I want to say you all have invested in Asana, Mercari, Wise, Auto, Algolia. Any other of like your best hits that you want to mention?
Well, I'm not allowed to cherry pick,
okay.
But the companies that I mentioned from the portfolio supports are also some of the companies that we obviously invested in.
For sure. And then can you talk, now let's like try to get to numbers. Can you talk about the current fund, size, and so on and so forth?
Yeah, so for our latest fund, that has brought us to roughly 2 billion of AUM, predominantly focusing, Series B plus on the direct side, that being also BC being our sweet stage. We both lead and follow, so we're happy to take the lead, but also happy to be a collaborative player. And we have a lot of expertise in our GPs that range not just Japan support, although that is obviously our differentiator, but also just helping you really think through the sales processes, to how to set up the company and how to navigate difficult times, because our GPs have seen it and have done it in the past.
And so the direct investing side is about $1 billion. And then the fund of funds, is that roughly 900 million? Or how?
No, so our latest fund, that was the total AUM. On our latest sort of fund 3 was roughly 800 million. And then our fund 2 for the fund of fund size was 200 million. So it's a bit of a smaller strategy. Direct investment is our main strategy.
Understood.
Yeah.
I believe you speak 5 languages, Serbian, English, German, Spanish, and Japanese. I have to believe that your fluency in Japan helps a lot.
It does. I mean, just as a way of, my day-to-day work, especially being, director of platform and having been chief of staff, most of the documents I ever created were in Japanese. But even now, it helps establish that connection and that relationship with our LPs, helps establish that trust and that knowledge that, hey, I can navigate your cultural context so you can be comfortable with me and you can trust me that whatever you tell me, I'm going to understand it and I'm not going to take it in any bad way.
One of your favorite quotes is to be everywhere, just be nowhere.
Yes.
I have to believe, though, given what you're doing with Japanese corporate LPs, that you have to be everywhere. And so, like, are your hours like you're working like? It feels like you're working multiple time zones.
I mean, definitely you have to be flexible, especially to make sure that, LPs get their answers promptly and that you're always up to date on what's happening. But I would say that, all of us in venture have to work hard, and we can't go out and be telling founders like, hey, work hard and then just go on a vacation for like 3 months or something. So I think it comes with a job.
In terms of the current hat you wear, which is fund-to-funds investing, can you talk more about this $200 million vehicle, what you all look for? My understanding is there's emerging managers that you might be investing in, and then there's established.
Correct. So as you mentioned, we do both emerging and established managers. On the emerging side, it's a little bit slow. The check size would be like single-digit millions. On the established, it's a bit higher because also the size. We do both sector specialists and generalists. And I would say that we're predominantly US oriented. We do have some exposure to Asia, but predominantly US oriented. And really what we're looking for, especially when it comes to emerging managers, is potential for alpha, potential to outperform. For more established, we are looking for sort of like stabilizing effect and sort of a lower return maybe, or better put it, lower potential for outperformance, but a bit more stability within the portfolio.
And so you're investing out of Fund 2. Fund 1, were you part of that team?
I was not part of Fund 1.
And are there relationships that carry over from Fund 1 in terms of
Yes.
you like the firms and you'll continue to invest in?
Yes.
And then is there a plan for Fund 3? Or is
Yes.
that, yeah, okay.
Yes.
Great. And in terms of how you see will evolve, like what are certain things that you all are planning for, that you all are looking forward to?
I think just to continuing to deepen our relationship with our LPs on the direct side, really driving another sort of like area of work that we do is called business creation. So what that means is we'll set up joint ventures with our LPs where they might have stagnating IP. And they will provide the IP, will provide with initial investment and the know-how how to run the company. So really finding new ways to strengthen our relationship with our LPs to make sure what we do is of value to them, especially as the pace of change is picking up. Then on the fund of fund side, I think we pretty much are aligned with our fund strategy. We like our current approach. I think as the funds become bigger and bigger, and as more funds are going to, Japan directly to fundraise, we have thought about, hey, so what is the most value add activity for our LPs? And really it comes down to access, and it comes to providing that access for names that might not be, brand or household names in Japan yet, but that we believe have a significant potential to outperform. And so that is something that we're excited about continuing to strengthen as we build our portfolio construction, our portfolio in the future as well.
You have a unique view of venture because of your work on the platform side, and then your work direct, and then funds. In your current seat, what lessons can emerging managers take from established managers, and then vice versa? What could established managers learn from emerging managers?
I think one thing that established managers are really good at from an LP point of view is making sure they communicate what's happening on the fund level. So very good at being, we call it institutionally friendly, meaning I don't have to chase you down to know how your fund is performing. I know that my financials will be issued on time. I know that if I reach out and I need to sort of understand how your fund is doing, you will be there. So that level which might sound boring, but it's extremely important to LPs to know that I have that level of stability and trustworthiness. And then what I think emerging managers do really well is that they just give you that sense of hunger and that willingness to really go deep, and you can learn so much about how they're thinking about building firm, and they're always trying to be better and do something differently. And really good emerging managers will also constantly be asking for feedback and building like a real deep relationship. Now, to the extent not all established managers can do that because their LP base tend to be much bigger and broader. But I think that is something that, when I talk to really great emerging managers, I always end up feeling like I learned something new. I feel energized, and I can feel that commitment to really building their firm and understanding what their vision is for the firm.
Do you all, as a practice, like to take LPACs or require being on an LPAC?
We do not require being on the LPAC. I mean, it's subject to the check size that we write. If we are a significant investor and the GP has decided to form an LPAC, then obviously we would like to be there. But we are also very collaborative in a sense that it's a give and take. We don't believe in pushing our GPs into doing stuff that wouldn't be beneficial. And so GP-LP alignment is extremely important to us.
Within venture, there's all this talk about the bifurcation. Mm-hmm. The large ones are getting super large. Mm-hmm. Like it used to be aircraft carriers, now it's like their Death Star size. And then emerging managers, there's been less of the past year. Some say a car at Fairview is like, no, there's still a lot. How do you think this will play out? Do you think this is continue to evolve and venture is simply like very heterogeneous? Bigger will keep getting bigger? I think we are going to see a couple of things. I think certain brands will continue to amass AUM. But I think that, the type of investors that are going to be investing in those are just going to be, your pension funds, your endowments, your typical, LPs. But I do see that, emerging managers, to be honest, in 2021, just given the flood of capital that we experienced as an industry, maybe we ended up having managers who don't actually want to be managers, but that ease of capital maybe led them to believe that they want to. So I believe that over time, we will end up with managers who truly want to dedicate decades over their lives to building a fund. And I think on that end, what's going to be important is how they differentiate themselves. And so I believe that we will be seeing managers that have a very specific value add, a very specific draw, and a reason why founders pick them. And I think that's going to really come down to your relationship as a GP with a founder. What can you add? What can you contribute? So I think we as an industry are changing. Obviously, it's hard to have a crystal ball and know how we're going to change, but I feel human connection is going to be much more important and more important than ever on the emerging manager side. Interesting, human connection, because I believe that as we've become more digital, the personal relationship becomes even more. As like AI can handle all the simple things, the relationships become even more important. When we had Akar of Fairview on the podcast, we got to talk about his hits in terms of on the venture side. And he talked about Altos Ventures, he talked about Emergence. Are there, I know you can't play favorites, but are there any hits that you can talk about on the fund-to-fund side and how they have managed to deliver outperformance?
So I cannot disclose the names, but in general terms, one of my, I love all my children, but one of the fund that I'm always happy to talk to, they just do a good old school type venture. They know what they're good at, their valuation discipline, they stick to their sector, and they have executed generational transition incredibly well. In a way that they've incentivized the next generation, in a way that, how even the existing, GPs and co-founders of the firm have truly, in a sense, you need to be willing to let go a little bit, but also they've just been really good people and they've stayed consistent. And so that is something that, whenever I talk to that fund, I'm always excited. Another fund is a fund that, has a little bit reinvented themselves. They really found an area in which they shine. They found their brand. Founders in that sector want to go to them. When you talk to junior people, they're like, oh, I would like to go and work for that venture fund. So those are some of the things that, when we see, it's just kind of like, okay, this is very encouraging and makes me happy, not just as an LP, but also as someone who, as an LP, spent a lot of time with GPs. And so to see them succeed, it makes you very happy as well.
What are certain things that are yellow or red flags as you are meeting GPs to potentially invest in? And then what are things that, like, when you see, you're like, oh, I can really identify, or I like this?
I mean, first, the obvious one, any sort of like ethical issues or signs that I cannot trust what you're saying is going to be a problem. But that is just a standard, hopefully a standard for everyone. I think for me, just coming from a structuring background, I really care about portfolio construction. I really care about if you're going to tell me that you are going to have a specific ownership target, how are you planning to get that? How are you making sure that that is not going to prevent you, if it's too stringent, from getting into good deals? It's just how the overall strategy is laid out and whether that GP can deliver on that strategy. Because if you don't have that, then obviously you can have amazing perspective on the market, you can have an amazing, access or network, but if there's a mismatch between where you're investing and where your network is, we're going to have a problem. So it's really that. It's just seeing what is your strategy and are you the best fit for the strategy? And as we've talked just now, will founders choose you, and why will founders choose you?
One of the things that you touched on was around generational. And there's like Kleiner missed it and then maybe has it now with the index. And then there's questions about benchmark. But regardless, another theme around generational is also the rise of solo GPs. I'm curious, what are your viewpoints on solo GPs? Pros and cons?
No, absolutely. I think, solo GP, we have several solo GPs, so we do invest in them. I think pro and con comes from the same factor. Pro is probably that you can move faster. You can make decisions. If there's a good deal, you can do the good deal. The con is that there is no one to challenge you. There is no one to ask you, are you sure this is the right valuation? And obviously the biggest con is what happens if something happens to GP. Because all LPs hopefully and theoretically should want to have a long-term relationship, because once you have a good fund, you want to continue that. You don't want to continue searching for new ones and missing out on good opportunities. So I would say that, solo GPs sometimes tend to have not a chip on their shoulder, but something to prove, and they have a lot of passion. And so it's, as long as you can paint the picture for me about how you're thinking about the firm evolution, how are you thinking about being able to deploy all the capital by yourself, I think it's fine. All LPs are different. Some LPs cannot bear the solo GP risk, and that's fully understandable. But for us, there is a place in our portfolio construction where we think that solo GPs do have potential for outperformance.
I want to touch on corporate venture because I think you all are not a corporate VC, but you all partner with corporates that are trying to do VC. And so you all also have a viewpoint on when it makes sense for a corporate to maybe have their own corporate VC arm. And so the corporate VC arm, just like the venture arm, has changed significantly. Can you share your viewpoints and where we are right now in terms of corporate venture?
I think corporate venture has evolved, and I think it's good that has evolved. I think there are always sort of like major pain points that persist to an extent. I think we have seen a lot of efforts not deliver expected results, and I think people are finally starting to learn what it takes for corporate venture to sort of succeed. And that is sort of like really clear definition of what are your objectives, what are your goals. When you say strategic return, what does that even mean? Do you want to find a company that you want to acquire down the line? Do you want to do a POC? You cannot leave it high level, right? And also, are you truly willing to connect the startups that you invest in with the rest of your company and ensure they're successful, and be their customer and be their user? Because sometimes there's a discrepancy between the venture arm and what the company is doing, the HQ is doing. And for us, we found that having the connectivity and being aligned across the two sort of like sides of the house is very helpful.
I want to touch on the crossing borders. And we touched on this a few minutes ago, but you've helped startups expand in Japan and other international markets. What are the common missteps you see founders make during the cross-border expansion?
I think the first one is expanding too fast, and that comes from two causes. So what do I mean by expanding too fast is expanding without not having your domestic market truly sort of like firmed up and, secured a certain like position in it. And the second way of expanding too fast is trying to enter multiple markets at the same time. Sometimes that can make sense, but more often than not, you might end up with having so much cost and maybe not enough resources dedicated into a targeted approach. So that is one thing, expanding too fast. Second thing is thinking that a couple of evangelists equal the market. And what do I mean by that? Sometimes you'll have a couple of inbounds, like really big clients from a certain market, and you'll think like, oh, our product can just go as is and expand. But just like in US or whatever country, you'll have people who are like enthusiastic, who are ready to like pound the table for your product, but that doesn't mean that everyone in the country is the same. And so being willing to sort of like understand that even if you have a certain pull from the market, you need to put the resources. And number three is truly understanding that and being committed to entering the market. So you need boots on the ground, you need to be willing to work with the market, you need to be willing to work, multiple time zones. So I would say it's those three: expanding too fast, mistaking a couple of pulls for the entirety of the country or market acceptance, and then just not dedicating enough resources.
When GPs go raise capital from LPs, those relationships can take years, if not decades. I have to believe when you all are raising funds from Japanese corporate VCs, that's easily years, if not decades. That it's very long relationship building, and that those relationships also can last a very long time. How do you all nurture those relationships so that you had brought it up earlier, you all feel like you're in a good spot, but you always want to provide more value? How do you provide more value?
So we do not treat our LPs as someone we send out the financial report and that's it. We actually have an expat program where some of our LPs send their expats to our office and we work together. We help them with understanding the technology, connecting them with our network, and sort of like understanding the pain points of the headquarters and helping them find solutions to address those pain points. So pretty much we build our trust and our relationship based on actions and not on words. And I think, whether that is LP-GP relationship, whether that is your relationship within the family, that is what matters, actions, not words. And so we're fully engaged. We help advise, if they're thinking about a new business, we help provide advice, insight, resources, so that they know we are a partner and we are in it with them, instead of just, give me your money and then I'll talk to you 10, 15 years later.
My understanding is Will not just does direct investing, fund of funds, but to this point, consulting.
That is not the right word. We actually do not like consulting. What we like to say is what we have is corporate innovation programs. So what that means is that we try to foster innovation thinking and innovative mindset within large organization. So we have this program that consists of design thinking workshop, innovation workshops, where we train, and this is for free to our LPs, so we do not charge for that. We train their employees, both people on the front lines and senior executive levels. So if you're ever in Palo Alto and you see a bunch of very high ranking people, just like Japanese people wearing suit and tie and trying to talk to you about the problem around the Caltrain station, they're probably participating in a design thinking workshop where we're putting them on the spot and asking them to try and figure out the user problem on a certain topic. That is not something that usually you can do in a Japanese culture. If you were to tell, SVP of any company, like, hey, for example, let's say SVP of a English company or an American company, go to Japan and do this in Japanese, they would probably be very uncomfortable. The same way around, right? It's not something that's necessarily comfortable for them, but because we have that trust, because they know that this is important to do, they're willing to do it and they learn. And it comes back to what we discussed about how we look for our LPs. We look for corporations that genuinely want to transform, they want to change how they're thinking, how they're approaching product development, and it's that match from the get-go that enables us to do things like this.
Do you run those innovation workshops in Japan and America?
Correct, and we also have some online.
Understood. This has been a wonderful conversation. I want to move to some rapid-fire questions.
Sure.
My understanding is that when you go visit home, you visit, where are my notes? You fly into Croatia.
Correct.
Beyond flying home, what are some of your favorite travel spots?
I love Austria. It's so underestimated. It's beautiful. Austria, Switzerland. I haven't been to Spain, but that is on my travel list.
Favorite treats?
Twix.
Favorite movies?
Ooh, Help.
Help.
The Help. Yes.
The Help. Interesting. I'm going to check that out. Favorite books?
Crime and Punishment by Dostoevsky.
Favorite places in Japan to visit?
Yakushima. It's an island, southern part of Japan.
Milana, this has been a fun conversation. Milana, thank you so very much for taking the time.
Thank you for having me.